Okay, fam, welcome back. So today we're going to be going over the Yieldmax ETF underlying stocks. We're not going to do all of them because there's way too many at this point, but we'll go over most of them, okay? So with that being said, let's get it. All right, so the first thing I wanted to go over here is the risk tolerance in the market. And this has absolutely nothing to do with these particular stocks we're going to talk about, but I was thinking about this on the way back this morning and decided to go ahead and bring it up. So, as you guys know, we're entering into alt season, and of course, Bitcoin has hit new all-time highs, all that jazz, right? So the alt should be moonshotting, and the Grayscale Trust should be moonshotting, and the Bitcoin miners should be moonshotting. But along with that comes the Russell 2000. So the Russell 2000 is the riskiest stocks in the market. The reason why the Mag 7 was such a heavy focus for Wall Street and for most people that were investing through 2023 and 2024 is because they are the largest companies on earth with the highest pricing power and the largest balance sheets. Okay. So these guys would flock into these particular stocks like Nvidia, Tesla, Microsoft, Facebook, Apple, so on, because more or less, it's pretty much the next best thing to cash. So it's their way of being invested in the markets without actually having to sit on the sidelines and still have some relative measure of safety. So now that shift is starting to slowly focus away from the Mag 7 into these very high risk stocks in the Russell 2000, the smallest 2,000 companies in the country. Like your startups and a lot of small businesses that need cheap borrowing costs that probably have substantial debt and very small balance sheets. These are more high risk plays. So this basically is a measure of risk tolerance in the markets. What do I mean by this? So basically what I'm saying here is that because the Fed is cutting rates, people have started, as we expected, they've started flocking in early into these riskier plays. I can give you guys a couple examples of what stocks that maybe in that category may be considered. Okay, so Open Door, that might be one. Matterport, Neo, maybe something like Fastly, Fate, DraftKings may also be in there. You might have some others in there like AMC, GME, ALT, which is one that we swing traded back in the day. I don't know where it's on. Oh, there it is. So yeah, that may be in there too. So these are very high risk plays. So basically, what I'm saying here is people are willing to put their money on the line for riskier and riskier bets as Trump's about to get into office and as the Fed keeps cutting rates. Okay. So what I'm saying is we're very, very likely going to get that all season. Okay. It appears that the stars are aligning, as they would say, for this to happen. So, all right, I'm going to, we'll start with Coinbase. Okay. So we're hitting resistance here. Do I think it's going to pull back? Based on these candles, I would say no. We have earnings coming up, and as you guys know, the more revenue that Coinbase gets through, Bitcoin and altcoins and all that stuff, which we've seen a lot of that in the last 3 months, the more likely they're probably going to beat. But even if they don't beat, in my opinion, it's probably still going to go higher because, again, we got alt season coming up. A lot of the volume that goes through Coinbase is altcoins. They also have, they are the custodians, I believe it is, for at least half of the major ETFs like the BlackRock, Fidelity, those guys. So yeah, they're making plenty of money. I'm not too worried about it. In terms of the technicals, this thing could see a pullback, but these candles right here, I'm just not seeing it. These are pretty bullish, especially this one right here at the end. That could always change tomorrow, just so you guys know. As far as I know, the markets should be back open tomorrow. Happy Thanksgiving, by the way. But if I was looking to position in Coinbase strictly, I would not touch this right now. I'd wait for it to get back to the support. So it's going to be 207 to 224, and then you got 303 to 370. But that's assuming that it does pull back. At this late in the cycle, I would say the likelihood it does pull back, probably pretty slim. Nevertheless, 73%. MicroStrategy, this one could definitely pull back. We did see that Burj Khalifa pattern I told you guys about. There is a possibility that kind of somewhere right around this level right here on the daily time frame, we may see a pop to the upside. So it could just keep going up from this point. That's going to be right around that 330. So if you see that level, then not financial advice, but you may want to consider proceeding with caution because it does look like a good buy on the daily. But on the weekly time frame, I mean, this thing is just, I mean, it's really overextended. But this is crypto. It could just keep going higher. So I would be looking to buy if I was going to buy, I'd be looking to buy back here at this green zone. So that's going to be 165 to 200. There is better deals in the market at this point, in my opinion. I'm probably going to get roasted in the comments for saying, oh, well, he's bearish on MicroStrategy. Guys, I'm not bearish on it. I just don't want to overpay. Okay. If you're a smart investor, and I'm not knocking people that want to get in now, I get it. Trust me. But a little patience may go a long ways. You know what I mean? If it does pull back here and it does go back up to these prices before the end of the bull run, you just locked yourself in a 205% gain. There's multitudes of strategies you can use with these too. So you can do cash secured puts. You can get some puts here and get paid some premiums to get in at these levels. Once they start approaching that, you can DCA down. So you can do the wheel strategy on these. To make extra money, you can. If you're a position trader and you know how to position trade, we've done a video about this. If you don't know what that is, go check it out. Just type in the YouTube moniker and then position trading and you'll find it. But yeah, we talk in depth about position trading and how to do that. Position trading is a good thing to attach to call debit spreads or put debit spreads, because when you are getting a stock that has just been absolutely nuked and you're looking to go long, that would be a good stock to get a call debit spread on. You can also just swing trade these on the EMAs. That's something that we do on the 4-hour time frame or the daily as well. This could potentially be a good area to start a swing trade, but you'd want to be confident in your position, have certain rules in place, all that jazz. Okay, so next one here, Netflix. This one is pretty expensive. I would say I'd be waiting for a pullback on this one. Personally, I think NVIDIA is a better deal than Netflix. Netflix is kind of expensive. Doesn't mean it can't go higher, but it's very expensive. Yeah, this thing is really, really expensive. Okay, so to give you an idea of what that pullback would look like if it was going to happen, let's just say it goes back to the red EMA, about a 29% drop. I'd probably be looking like somewhere around the $700 range to maybe get in. That would be where I'd be looking, and then just ride it back up to the top. So about a 30% gain. And the reason why I would say the top of this range and not at the EMA is because by the time the price does get back down to the top of this range, this red EMA may also already be at the top of the range, okay? Because again, it takes time for that to play out. Okay, NVIDIA. Yeah, this, I mean, it is at all-time highs, sure, but and there is a little bit of concerning divergence going on here. You guys, I don't know if you can see it. The earnings was great. Just so y'all know, we did review that, but there is some kind of bearish divergence going on here. That's not great. Yeah, I don't like that too much. There is also the possibility of a rising wedge here. And I'm not bearish on NVIDIA, don't misunderstand me, but I mean, based on the wedge pattern, it could drop down to 91. I know that seems a little scary, but that's what the wedge says. So it's just a question of whether we hold the line here at 135 or not. That remains to be seen, but I'm still pretty bullish on NVIDIA. I mean, again, we have said that NVIDIA is the king of the Mag 7 and the AI companies. We expect it to continue to gain value over time. And it has been on the monthly sitting at this level for about 6 months. So maybe it's a pullback in time, or maybe there is actually a pullback coming. We'll have to wait and see on this one. Personally, I mean, we'd consider getting a little bit in here, but we would also, if we see it break this line here, we may hold back and wait till it starts kind of getting closer to the bottom EMA here at 105 to get in. I would say NVIDIA is still a better deal than Netflix, in my opinion. Tesla, just so you guys know, we do want to get some shares of TSLL, but this one right here for options, but it's a little expensive at this point. I think TSLL just made a record high, if I'm not mistaken. The RSI has also got overbought on Tesla. And last time we saw this, and again, do understand I'm not bearish on Tesla. I'm just saying that it's kind of expensive at this point. Last time we saw this, there was a huge 55% drop. Okay. And I'm not saying that's going to happen again. It may not, because again, Elon is working with Trump now. So we'll see. Best case scenario. Let me rephrase this. Best case scenario, I would be looking for maybe a pullback into the bottom of this green zone. So 280 to about 315. And then maybe we get a push up here into the highs. So 385 to 415 on this one. But I mean, if the dip buying opportunity presents itself, you guys, will have the opportunity to take your respective positions at a discount. We'll be looking to get back into TSLL and maybe even TSLP if the price does come back by that point. And just to prove a point here, okay? So we used to have TSLP. We have not had TSLL yet. The only one we have is Tesla, but we don't have it right now. We will be getting back into it if we see those discounts. Okay, so XOMO. You guys know my theory on this one. When the wars overseas come to an end and Trump gets in office, oils, they start, drill, baby, drill, all that stuff. The price of these oil-related stocks are probably going to come down to more realistic levels, in my opinion. And again, I would see this, and I've told you guys this before, okay? This is usually when you see a sideways, either at the top or the bottom of a move, it's either accumulation or distribution, right? We've talked about this. What are we seeing right now on XOM in this case? Distribution. In my opinion, it's distribution, okay? Very rarely do you have something at the top of a move that goes sideways, that ultimately goes up from that point. And this is accumulation back here. So yeah, I think it's probably going to pull back into the zone ultimately. I'd be looking for about 84 to 95 for a buy here, and then at some point 115 to 120 in the future. But even if it didn't go up, you'd still be getting ExxonMobil, which is a dividend stock at extremely cheap values. 45% gain here. Square. So, I would say that this one is, I think Jack Dorsey is if I remember correctly, I believe Jack Dorsey is the CEO of Square, or Block as it's now called. He personally owns Bitcoin, okay? So this is a Bitcoin play, but this is also a risk-on play. Like I told you guys before, people are FOMOing into Russell 2000 stocks, right? The Russell's about to break all-time highs, and it's right around the same time of year that it usually does that. The Russell 2000 stocks, the small caps, they usually blast off to the moon somewhere between November to February. That's usually when it happens. So it's all kind of lining up, right? So this one's pretty bullish. It's oversold on the weekly, but look, if you're talking about the long term here, if you're a long-term holder, it depends on your strategy and what you want, right? You got options, cash secured puts, covered calls, call debit spreads, put debit spreads. You have swing trading. There's long-term investing, people that kind of want to ride it for a 4, 5, 6x. But in terms of the the price compared to the highs up here, dude, this thing is dirt cheap, okay? It's still minus 67% from the highs. So do whatever you want with that. That's part of the reason why we bought AMC, even though everybody says it's a stupid stock and, AMC is not going anywhere. It's a meme stock, dude. It's broken, blah, blah, blah. Well, that's what they thought last time, that Bitcoin and altcoins ripped to the moon, and then AMC did like 100x. So, yeah, I don't know. Is it really dead? It's going back up. It's almost at $5. So, I don't know about y'all, man, but I'm on board with the meme stocks. I don't see any reason why they shouldn't go up. If you got meme coins going up, why shouldn't meme stocks go up, right? Yeah. Haters gonna hate, man. Let them do what they do. They'll see in time. So, the green candle here is confirmed above the zone. So I would say this is actually a flip zone. Could it come back down to the EMA? Sure. That'd be somewhere around 70 to 80 bucks. I don't think it's going to happen though. So I'd be looking for the buy right where it is currently, 82 to 91, 143 to 150. And keep in mind, we're doing this. If you're a Yieldmax investor, then you can see through the Yieldmax lens on this one. If you're just looking to get into the stock itself, we're doing that here too. Okay. So 84% gain on this one. Actually, to be honest, you know what? Now that I'm seeing this, we might actually consider maybe taking some call debit spreads on this one, because this one, yeah, I mean, it looks pretty good. I'm not gonna lie. I mean, it's overbought on the RSI, but the fact that this zone is flipped is, in my opinion, it's a pretty good position to get into a call debit spread. Okay, so PayPal, same thing, risk on. I'd say this looks pretty good. I mean, we have a flip zone here, so it is now fully support at this point. It's above the EMA, is above the zone. Any pullback should be met by bull demand, in my opinion. So 70 to 80 for a buy area here. Target's going to be 105 to 125. Your maximum move on this one will be 75%. I'd say this one's pretty good. And again, this one is massively undervalued. Okay, there is huge, mega upside here potential for not just the Yieldmax ETFs, but for the stock itself. Still 71% off all-time highs. Okay, TSM. Yeah, this one kind of terrifies me a little bit. The whole China stimulus thing. I'd be looking for a pullback on this one. Again, very similar to NVIDIA, we're seeing a bearish divergence forming here. That's an early potential warning sign that maybe it's going to pull back more. So I would not consider starting to get into this one until about 160 if I was going to do it. You can see this candle here, candle top, candle bottom. It's a good area. If not, maybe 125 to 140. If you're really scared and you're like, well, hell with that, dude. That little red EMA is not going to hold. I mean, yeah, you might be right. So in worst case scenario here, maybe you get the deeper pullback and get a 70% gain. Okay, Snowflake. Wow. Big green candle. Holy crap, dude. Okay. So, I mean, it's lifted. It looks good. In my opinion, it's not overbought. The earnings were obviously very good. Otherwise, we wouldn't be seeing a big, fat, almost a God candle-like thing going on there. But personally, I'd be waiting for a pullback. Okay, usually when the golden cross happens, there is more often than not, there's some kind of retest of the EMAs. I'd be waiting for that. That's going to be about 130 to 140. Targets would be 190 to about 240 on this one. The move here would be about a 75% gain. And again, I did want to tell you guys that this one is also massively undervalued. Again, as the Fed cuts rates and we go back into a normal economy, if that's what you want to call it, there's going to be increased risk appetite for these stocks. Okay, these stocks that most people dumped and flocked into the Mag 7 for, yeah, these people are going to want these more and more. So it's still down 60% from all-time highs. So you may see this down from the all-time highs and say, oh, that's, dog SHIT. I don't want to touch that. Well, just consider the fact that eventually, the whales, the 7 trillion in assets and in money markets is going to want to flow back in here. They're going to buy it if you're not. And, if you miss out on the opportunity, well, there's another one right around the corner, right? Okay, so AMD, I'd actually say AMD, based on what I'm seeing right now, is it looks pretty good. It's not really oversold, not overbought. It's kind of fair value. It is touching a support, which is what we look for, especially for call debit spreads. So 124 to 133 here, good support. 160 to 170 would be your target. All-time high is 228. So just so you guys know, this is actually quite cheap. It's down 41% from the highs. We're pretty bullish on the semiconductors. This is a semiconductor, just so y'all know. It's a part of Soxhole, so 33% gain here on this one. Airbnb also looks pretty cheap. I like the way this looks. The EMAs are still pointing up. That's good. It does appear that there maybe is an inverse head and shoulders going on here. Regardless, you might also have a bump and run. I don't know if you guys know what that is, but if not, go look it up. They're both bullish patterns, so just taking it from the top to the bottom here. Move this outwards, assume that this is the breakout point. You'd get a target pretty much right at resistance. I mean, guys, I literally can't even make this up. So that'd be 178 on this one. Yeah, I mean, anywhere probably between the current price and the top of this green box here is a good buy, in my opinion. 130 to 138, not financial advice. Targets 168 to 178 on this one. 35% gain. Again, if you're absolutely terrified and you're like, screw that, I don't want to buy until it gets to the bottom of the green box, 115, okay, fair enough. That'd be a 56% gain on that one. Okay, KWeb. As the U.S. continues to print money, we're probably also going to see China print money and all the other banks around the world print money, because that's usually how it goes. So I would say there's a good chance KWeb's going to start smashing to the upside. People that were in clip for a long time, like us, we used to have it. They may start eventually FOMOing back into that position as the price rises with the valuations of the underlying here, the ETF, which is KWeb. Because again, you guys can see when 2020, after the pandemic popped off, right, and then we got all the stimulus, what happened? This thing went absolutely stupid. It did like a 2 or 3x. So we might see that again soon. I mean, the EMAs do look bullish. Okay, we got the golden cross, all that jazz. We have a series of higher highs and higher lows here. That looks very good. And we did tell you back here when it got oversold on the RSI and got into the green box over the course of time. Usually that's a pretty good time to get into this. You can see it's pretty rare for that to happen. And ever since then, it has gone up. I don't know how long it's been since we told you that, but you would have made about a 63% gain just getting in right here at these lows. But what I'd be looking for on this one is I'd be looking to buy somewhere around the top of the green box, so 26, and then maybe get out at 68 to 78. So this could be a multi-month or even a year or two long position, 200% gain. Alibaba, so again, it's another Chinese stock. Not cheap, but not expensive. I mean, it could just be retesting this line here and then, bounce potentially. So I'd say anywhere between 73 to maybe 73 to 80, somewhere in there would be a good buy. And then the targets would be about 120 to 140. About a 90% gain. And again, it goes back to the whole Fed stimulus thing. As the US continues to print, likely all these other countries will too. That's just kind of how they do it. SMCI. So this thing was disgusting for a while, but it's starting to look better. So we had a mixed earnings. I'm aware of the accounting thing. I wouldn't be too worried about it. I highly doubt a stock like this that's partnered with NVIDIA is going to get delisted. It recently got oversold. I would approach this one of two ways. Either I would go all in on a position trade, because this is literally, this is a position trader's dream right here, to buy at macro support, sell at macro resistance, right? That could happen in just a few months, as you guys can see here. So I'd either do that and have full confidence in the trade and say, screw it, I'm gonna throw a caution to the wind. I'm gonna throw like 10, 20,000 bucks in here and let it ride, get a nice 3x or 4x, whatever that's gonna be. Or I'd use options to get into it with cash secured puts, or maybe do some leverage plays with some call debit spreads and just say, well, I'm just gonna ride it back to the moon, which we may actually do that now that we're looking at it. Or just simply take one position. I mean, think about this for a second. If you buy 100 shares of SMCI, and I'm not telling anybody to do this, okay? This is not financial advice. But if you buy shares of SMCI at these prices and it goes back to 125, well, let's think about this for a second. 125 and 100 shares would be valued at 12,500. Minus 3,500. With just 100 shares, you would have locked in a $9,000 profit. Okay. I mean, again, I can't tell you guys what to do with your money, but I would say with the accounting issue, it's a problem. I understand why it dumped, but that's kind of the nature of the stock. I mean, this thing is extremely volatile. I mean, really, like even more so than NVIDIA. But it looks good in my opinion. Okay, it's cheap. So buy zone 23 to 35, sell zone 93 to 125 here. Worst case scenario, it pulls back to that box. 416% gain on this one. All right. Hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.